Gwen Preston of Resource Maven. I'm here at the Metals Investor Forum in Toronto at the beginning of March, and I'm joined by Maryse Belanger of Atlantic Gold. Atlantic is a company that I've followed in the Maven portfolio for almost a year and a half now, since I came down when you were just getting going on construction. A lot has happened in that year and a half. The company has not only gotten started producing gold, but is on the brink of announcing commercial production. And just announced a big expansion plan that is a valuation game changer in the big picture for this company. So, to start, give the brief explanation of what Moose River is right now, what the mine is, what it produces, the snapshot.
The Moose River mine is slated to produce between 82,000 and 90,000 ounces this year at very, very low cash costs and low all-in sustaining costs between $675 and $735. That is Canadian dollar.
Canadian, exactly.
Yes. So that's the status right now with production.
Right. And this is from two open pits. In the mine plan, there's two open pits that feed a single process plant, tapping into ore that's averaging sort of 1 to 1.5 grams.
Yes, that's right.
That
yes.
captures.
Yes.
So, the big exciting news has clearly been the expansion profile that you just released. So why don't you explain, I knew that it was going to be bigger. It was bigger than even I expected. This is looking at producing over 200,000 ounces of gold and maintaining your costs at the level that they're at. So take us through why and how this is going to be in the future.
Okay, great. Well, first of all, when you think about mining and processing, you have to crush the rock, do the grinding before you can do anything. So we did multiple trade-off studies to look at how we would configure the plants, where we would do some activities as opposed to building full processing facilities at each of the projects.
Right.
So one of the things we know about Nova Scotia and the 4 projects we own is that the metallurgical response is exceptional,
right,
and we get very, very high recovery by gravity. So therefore, it made perfect sense to do crushing, grinding, gravity recovery, and small amount of float concentrate at each of those sites and bring those concentrates to the existing processing facility. It means we can minimize the footprint for those processing plants, the new ones, and also it means we do not need to have cyanide with the carbon in leach everywhere we develop in Nova Scotia. Therefore, we believe it's going to be easier to permit those projects.
Right.
So we rely on physical properties only to produce a concentrate, bring it to the existing facility.
So that's how the operational side of it is pretty straightforward, and hopefully the permitting side of it should go smoothly. Let's talk about the resources that the expansion plan was based on. So the mine plan that's currently in action has 2 deposits in it. The expansion incorporated 2 additional deposits, but the resources for those are already somewhat dated, and you've done a whole bunch of work since those resources came out that suggests that they're probably a fair bit bigger even than the significant numbers that were included in this study.
Yes. Effectively, the mineral resources that we used for the study are actually dated July last year. Since then, we have completed 35,000 meters of drilling. And I don't know if you remember, but in the mineral resource estimate published last summer, there was still 250,000 ounces of inferred material remaining in that resource base. So we have gone on, finalized the drilling to infill at the right spacing. And we have also drilled extensions to those 2 deposits. So we have been releasing on a regular basis some results, but you will see more results coming out. And the phase 3 expansion we're looking at, and I'm sure you were going to ask about this, includes 100,000 meters of drilling to cover that 80-kilometer strike length of the right rocks, the right structure, and the right stratigraphy where we believe there's potential. So that 100,000 meter program will start March 15, and drilling in the region will be done systematically on lines, drilling sections spaced 1 kilometer.
Right.
So that's the plan for the next 100,000.
So there's a lot of factors at play. It's basically an ongoing process here, as you would expect.
Yes.
Get the mine going, plan the first phase of expansion, increase probably the confidence and ability to do that, while also demonstrating that there's more yet beyond.
Yes.
That all adds to a project that's already producing gold for $555 US an ounce,
Yep.
all in. So let's finish up by talking about how we think that will play into share price. So Atlantic has certainly already had some re-rating as it's gone from developer to producer, as it should.
Yep.
But what do you think is the value argument here? If someone doesn't already own Atlantic, what do you think the value argument is from here? Is the re-rating already done? Is there more of that yet to come? Or are there other possible situations that could transpire? I mean, $200,000 at $555 an ounce or 200,000 ounces at $555 an ounce is a pretty attractive proposition for a lot of other miners out there. So capture a bit of that for me.
Okay, first of all, on the re-rating, I really believe that people are waiting for us to declare commercial production, one. And the second is that believe that people are waiting to see at least 1 quarter, maybe 2 quarters of stable production at the cost that we have quoted.
Right.
So I think the market is just waiting to see.
Yeah, the proof's in the pudding at the end of the day.
Exactly, and 1 or 2 quarters of stable production at the cash costs we've said, I think will do the trick in terms of re-rating. That's one. 2, as you know, strategically, we can look at growing the company, and we can look at adding assets and adding deposits.
Yeah.
Think about the Maryse, owned by Oceana Gold, which now has close to 12 pits, I believe,
Right.
in a region, central milling facility. Or optionally, we could also look at selling the company.
Right.
So there's a few strategic options to consider in the near future.
Yeah, but at the end of the day, whichever plays out, you're in a bit of a valuation sweet spot right now where the re-rating isn't finished. There's a lot of upside, fairly near term and medium term and long term upside that's advancing all the time.
That's right, and obviously being acquired would be at a premium.
For sure. And one point that I like to raise about Atlantic, and I know you do too, is management owns more of this company than I think of any other company that I know in the mining space.
That's right, so that really ensures shareholders' alignment.
Absolutely.
Yes.
Perfect. Well, thank you for the update, and thanks for watching.
Thank you.